I posted this video a while back about buying versus renting, and I was taken back by some of the comments I received. Touchy subject, I suppose. But my key intention here was just to show you guys that when you own a home, you can be building your own equity versus building someone else's when you're renting. I guess I didn't get that message across very clearly based off of some of the comments that I received. So let's dive into these comments a little bit more and let's go ahead and break them down. But before I do, I'm Ligaya, your local Austin realtor. I help homeowners and sellers with the home buying and selling process from start to finish. So if you're thinking about buying, selling, or relocating in the Austin area, then hit that like and subscribe button and the notification bell so you can keep up to date with everything that I push out regarding the Austin real estate market. But let's go ahead and let's take a deeper dive into what some of these comments said when I posted the video earlier about buying versus renting. Let's start with comment number 1. The commenter said, yes, we're all aware of this. The issue isn't that people don't know, it's that they can't save up for the initial $40,000 to $70,000 down payment needed to buy a house in the first place. Wow, that's a big down payment. I did give a response, and I also got another response back from the same person. This time they said, right, I could put 10% down and pay a $5,000 a month mortgage. I'm with you. It's up. But the reality is, it's a terrible time to purchase a home for the average American. People aren't renting because they don't know better. They're renting because it's what they can afford. I agree with you. Right now, some people can only afford to rent while they save up to purchase their home. But let's back up a little bit and let's start with your first comment. Regarding having to put $40,000 to $70,000 down, I totally hear you. And I understand that saving for a down payment can sound like an insurmountable challenge. However, there are loan programs out there that require as little as 3% down. For example, FHA loans, they can significantly reduce the initial financial barrier to owning a home, which is your down payment. Additionally, there are state and local programs that are there to help first-time homebuyers with down payment assistance. It might be a good option for you to explore what some of these programs are and see which one that you qualify for. And then to the second response regarding a $5,000 mortgage, listen, I completely understand you. The current market conditions right now make it seem like home ownership is out of reach. It's important that you consider all the costs associated with purchasing a home, including the potential tax benefits and the long-term investment aspect. If a $5,000 a month mortgage is too high, then it might be worth looking into different areas, other neighborhoods, smaller homes, or even homes that need some updates after you move in. Each market is different, and adjusting your expectations can open up more possibilities for you. Now let's move on to the next comment. The commenter said, not necessarily these days. That might just cover the interest on the cost. Renting can be a lot cheaper than buying. I don't disagree with you. In some markets, renting can definitely be a lot cheaper than buying, especially in the short term. However, consider the long-term benefits of home ownership. With a fixed mortgage rate, your monthly payments will remain consistent, whereas when you rent, your rent can increase year over year. Plus, each mortgage payment contributes to building equity in your home, which can act as a financial safety net for your future. And then the last comment I received pointed this out. We live in a crazy time for home buyers and renters. Everything is so expensive. If we ever bought a home, we don't know if we will ever get back what we paid for. Rents are going up as well, and if we don't buy, it feels like prices for rentals and purchases are both going up all the time. If this isn't a catch-22 situation, you are absolutely right. It is a challenging market right now. The key is to think long-term. Real estate has historically been a solid investment. And while there can be fluctuations, owning a home means that you're not at the mercy of rising rents. Additionally, owning a home can provide tax benefits and the potential for appreciation over time. Although renting does give flexibility, buying provides stability and a chance to grow your wealth. In conclusion, if you pay $2,500 a month in rent, that's $60,000 a year that you could be putting towards building your own equity versus building someone else's. Home ownership might seem daunting, but with the right information and support, it's more achievable than you might think. So what other questions do you have about buying versus renting? Drop them in the comments below and let's talk about it a little bit more. Once again, my name is Ligaya. I'm your local Austin realtor. And if you're thinking about buying, selling, or relocating to the Austin area, then hit that like and subscribe and hit that notification bell so you can keep up to date with everything I push out regarding the Austin real estate market. Thank you so much for tuning in to this video. I hope I was able to clarify a little bit more the benefits of buying a home versus renting. If you have any questions, feel free to drop it in the comments below, and I'll see you on the next video.